Thank you for joining us, everybody. Welcome back to another episode of the Three Seasons podcast, where we talk about the three seasons of your wealth: accumulation, protection, and succession. Today, we are blessed to have one of my favorites in the industry come on and talk to us a little bit about year-end planning and what's going on and what you should know. Um, Ladies and gentlemen, this is Mark Halpern. Mark, thank you so much for coming on the show.
Thank you so much for having me, Tyson. It's great to be here.
Man, this is really cool to be able to utilize, virtual communications and talk to you. I get to see you and the advisors get to see you all the time doing your weekly LinkedIn show. And then we had an opportunity to connect live and in person this year, which was even better. It doesn't
I
happen
love,
as much as you want to.
yeah, I love that. That's like when I have all these pen pals on LinkedIn, and depending on what city I go to, I was just in St. John's, Newfoundland, last week, and there's an advisor out there that we've been connected for 3 years, and he was the one who managed to get me to come up there to speak to the Healthcare Foundation. So it's always great when we get to meet each other in person. Interestingly, people look different when they're not in one of those little boxes on the
Yeah.
Zoom screen.
Yeah, right. I am three-dimensional. You just can't tell.
Yeah, exactly.
Um, what I love about, I think, what you do so well, Mark, and what I appreciate a lot is unselfishly giving away a lot of things that some advisors feel they need to keep secret, like it's the secret sauce. And you're sharing it for the benefit of clients, for the benefit of the foundations that you work with, but also for the benefit of advisors, so that we have something to align to, and then we get like a check to say, maybe I could do better, or maybe I am doing it right, but I like the way Mark says it because, you're a veteran of the industry and you've been around long enough to, I'm sure, try different things, and this is what works.
Well, thank you. I appreciate it. I think that the challenge for a lot of people is they often take the simple and make it complicated.
Yes.
And we're living in a world of such hyper specialty and complication that the key is to be someone who takes the complicated and makes it very simple. It's really about the language, the words, the stories, all of that. So I feel very blessed that, I've been given these great skills and ability. And in terms of sharing it, Tyson, I hear that as well. I always think people are very territorial, like, I'm not going to share my secret sauce. And I just have been very grateful because I've had some advisors who have been just so generous with me, mentors, and who give me that, like, their most secret sauce. And you think, like, why are you giving that? And I really feel that I'm only who I am because people before me have been extremely generous. So, but in this particular area, like where we talk about the ideas around charity, Tyson, I do have an ulterior motive for sharing that with advisors.
Yeah. Awesome. I'm sure we'll uncover that as we go.
Yeah,
Um,
sure.
but that definitely that's one of the things that has really drawn me in the last couple of years. And I'm not sure how I discovered you first, whether I stumbled upon you on LinkedIn sharing your message, or if I was introduced through one of our mutual friends. Shout out to Sim Sahi. It's like my big brother in the industry. And
Loves him.
yeah, when I transitioned to the independent side, Sim was one of the first guys to greet me and really like show me, hey, this is how you do it when you're fully on your own. And just been a fantastic guy.
Well, Sim joined me. He also, I think he stalked me for a while on LinkedIn, and then he reached out, and we spoke, and I just laugh because he thinks he's speaking to himself. I'm a regular guy, just like you. We are all, take the mask off, try to be the best father, be the best spouse, be community person. We're all wearing just a different mask, but we take it all away and we're the same. But Sim actually joined. I have a mentoring coaching program called powerofplatinum.com. And Sim's been with us for a few years now. And it's great. It's a mentoring coaching program for advisors to become experts at high net worth insurance and strategic philanthropy and practice management. And just, it's a whole 1 year program. So Sim, I'm so grateful to have him as part of it. Maybe
Yeah,
you'll join too, Tyson.
it's on my list of things to do, and
Good.
it's a long list, but it is on there.
Good.
One of the things that I really love about the messaging that you and your team do, especially heading out of summertime and into the fall, is you start talking about year-end tax tips and planning strategies. So my partner and I, we work with a lot of medical professionals and incorporated professionals. and those messages really, really resonate with us. Um, I was wondering, when you're looking at dealing with small business owners or incorporated professionals, what do you find are some of the top, like one or two things that people can do to simplify their life or like realign things?
So, first of all, most people have done little or no planning. I just want you to know they're so busy on the offense and
Yeah.
doing all the stuff, the accumulation. When it comes to the defense, like I mean, billionaire families that don't have wills in place,
Yeah.
or they have old financial furniture for an old type of financial architecture, yet it doesn't relate or really look what their current situation is. So, they say that wisdom is power. You need knowledge and wisdom from people. So it's really important that people have a team. You really need to have a professional team. You need a very good accountant. You need a very good lawyer. You need an investment person. You need a sharp insurance individual
Hmm.
like you, Tyson. You need somebody on the philanthropy side, and those people have to be talking to each other. You can't be living in your little vertical
Yeah.
because each of you are special. So that is for sure what people need. But more importantly, and I've heard this from other groups where you have somebody who has a very complex estate and they don't ever get it over the goal line to get it done. And the reason is you need a Sherpa. You need like sort of a team leader who's going to help coordinate and really put time bound measurable things towards getting those things done. Because otherwise, let's face it, you make your RSP payment on March 1st because there's a deadline. You pay your taxes on April 30th because there's a deadline. Unless you put deadlines to things, it ain't going to happen.
That's right.
So I would suggest that those are really kind of a key thought that people should be having. And certainly during this time of year, as we get towards December 31st, and you got a big tax mountain that's going to be due in April, this is called prime time for planning.
Yes, absolutely. I 100% agree. And I think this is where it really struck me a few years ago when I stumbled upon your content was the the aspect of planning called strategic philanthropy. And when I grew up in the industry, they talked about six pillars of financial planning. Philanthropy wasn't one of them. And I found it so odd that once I started to uncover this area, how come nobody else talks about it and really nobody else knew about it?
I said, imagine if you had the cure for cancer. You're little and you're little, and you got the cure, and you'd be like, oh, I want to give it over to everybody. But who are you, and who's going to listen to you? And they've got bigger places and louder voices and all the rest of it. I don't have the cure for cancer, but I have something that every single Canadian should be knowing about, right? And unfortunately, unless they're hearing it from their professional advisor or from a charity, perhaps that they're a major donor for, then they're never going to hear about it. And I've given presentations to the largest accounting firms in Canada and family offices and money managers, and they're outstanding professionals,
Yep,
often more reactive than proactive, but there's a lot of proactive people. But they do an outstanding job up till here, but there's an entire shelf on philanthropy that remarkably nobody's speaking about.
right.
And that's what gets me excited because we have the ability to help clients turn taxes into charities to create enduring legacies for their families at the expense of the taxman. And the taxman's all behind it because they know that they can't afford to sustain all of social capital in Canada. So they've introduced 25 different pieces of legislation since 1995 to make it more favorable for Canadians to give to charity. But it's getting better, Tyson. Like more people like you are talking about it. And it's not enough just to have it as one of those list of things that they have to cover in their holistic financial plan. There has to be a pivot to now move on that, not just say, I talked about it. There has to be a strategy for your strategic philanthropy. And
Yeah.
hopefully that's something that we're all getting, accustomed to.
Yeah. No, I 100% agree. It's difficult to move people to the place of, like as we're planning. So maybe it's pre-passing away, like while you're alive, you have charitable planning in your plan, which is good. And then definitely upon, settling the estate, you can also incorporate philanthropy there and potentially, wipe out estate taxes that are there. Um,
Absolutely.
I think a lot of people they plan with their hands closed so tightly they don't want to give up money, not really thinking that the CRA is going to take a chunk anyway. And so to walk them through the process of giving to something that they believe in anyway, whether that's a children's hospital or a foundation that they're connected to, a lot of people have never given significant money away that we talk to, and so to start that conversation, it's quite the unraveling.
Absolutely. Look at it's pearls of wisdom, and we all have ADD today. Like, if you, Tyson, you send a two-paragraph email to your client, chances are, even though you got a great smile and they love you, you're asking them a lot to read two paragraphs, right? And if you leave a message or set up a meeting, people are just so the key here is that we need to figure out a way to get in front of people on a favorable basis. But to help people understand what something does as opposed to what it is or how it works. Let's talk about what it does. When people understand what something does, now they're going to be that much more open to discussing how it works and how it actually applies to their situation.
Absolutely. So, how did you stumble upon using philanthropy as part of the financial planning procedures? Like, what brought you to that opening?
Yeah, so listen, it's always been a part of our family tradition. I'm Jewish, I'm Orthodox. We're very big into tithing our money, right? And that we actually have a moral and ethical obligation. As a matter of fact, we call it tzedakah. Tzedakah is a Hebrew word that's often mistranslated as charity, but what it really means is justice or righteousness. We have an obligation to give back, and there are two ways to give. I can either write a check myself and do something to a finite amount, or I can teach other people how to write checks, create a lot more money, and actually get a lot more merit from all the work that's involved in getting that done. But you mentioned about basic planning. We heard just a couple of weeks ago from a retired medical professional who had, when the capital gains exemption went up, they exercised some stock and basically have a $2.5 million tax bill that's going to be due in April. So they happened to hear me on a financial podcast that was done by a guy named Yatin Chada.
Yeah.
He's a radiologist in North York General Hospital. He does a financial podcast, and this person heard it and reached out to me thinking that we could help them. Anyway, we could. We turned that $2.5 million tax into a $4 million donation made up
Wow.
of appreciated security. So that $4 million is going to two institutions. Now, Ken, all I've done is I feel really good. I got a dopamine that I've just created $4 million of charity. When I was growing up, and I knew somebody who gave $1 million to charity, I was, oh, wow, they're rich. How do you do that? I just created 4 million, right? That
Yes.
means that makes me pretty important. But that's not where the story ends. The story ends that they've also got a lot of money sitting inside of their professional corporation now, an investment company, and there's going to be a multiple of $10 million tax that's going to be due there that the family has not done any planning around. So our intention is to create a pipeline to be able to get that money out from corporate money into personal money and do a lot of charitable planning as well so that they're remembered for leaving a large check to charity as opposed to writing a big check to Ottawa. But again, that comes from giving it the attention that it deserves.
Yeah. Yeah, I agree with you. That's fantastic though. Like,
Yeah, and when we share this information with people, all we ask is, like if you, Tyson, you learn something new and you actually turn it into something, you turn it into charity or into some business success for yourself. All we ask advisors is please share it with us. Let us know that it worked, right? Because we have a corporate mission that's made up of three parts. One is we really want to educate and inspire all professional advisors across the country and charities to be incorporating strategic philanthropy into clients' estate planning. Okay, number one. Number two is we specialize in tax exempt insurance, and everyone knows what insurance is, but they really don't understand what it does, especially at the high net worth. So that's kind of what we want to get around as well. But the third part is we're trying to create a national community of 100 professionals and charities that if each of us are creating $10 million a year and you've got 100 entities doing that, that's $1 billion a year. And
Yeah.
that's not like pie in the sky. It's kind of like crowdfunding. So that's what gets me up in the morning, that Mark Halpern, the guy who grew up poor, can create $1 billion a year. Like that makes me very excited.
Yeah. That's fantastic. I think that's I had another guest on the podcast and we were talking about this, and I think people who are kind of like 40 and under is they're missing that mission that you just described, where you have something that is like your North Star, and it's something that you can align all of the activities, your goals, your thoughts in your life towards the mission. And I think that's wonderful. I think that more and more it should be talked about, and it's not. And
Thank you. I always encourage people to go onto YouTube and Google Simon Sinek.
yeah,
Simon Sinek has a pod. He's got a YouTube video that's been seen by over 100 million people. It's about finding your why, not your
yeah,
how and your what, but finding your why. If you can figure out what your why is, then all the hows and what's come together, and people will buy into your why. So, it took. I've been in professional practice for 34 years. It took a while to find that why.
yeah, absolutely. That's but yeah, I love what you're doing. I love the success. You touched on a couple of things working with wealthy families. And so one of the things that I came from is I worked with very normal middle class Canadian like working families, and I did that for over 10 years in trying to instill values and thought processes. And so when I get a chance to talk to an advisor like you that works with wealthier families, some of my questions are typically, what do you see in what wealthy families are doing internally to talk about money values and money talk within the family? Are they doing something that's dramatically different from normal, regular families? Or is it just like one or two small things that you see that make a difference for them?
So look, it's a great question, and there's no cookie cutter here. Every situation is very unique. You've got some of the old families where everything stays at the top and nothing is shared with anybody else, right?
Yeah,
And then even the younger people might not want to know what mom and dad have done because they're like, mom and dad, you're not going anywhere, and they sort of have their head in the sand, around succession and whatnot. And then they're the opposite, which is where the older generation shares everything that they're doing with the younger generation to help them understand where they fit into the whole mosaic. But that would also mean that the older generation has actually done some planning, right? So that they can communicate to that younger generations what happens. So often they keep tight lipped because they don't have basic planning in place, right? So,
yeah,
it would be a little bit of an embarrassment to share with your younger generation what you've done when maybe you're a little bereft as well. You haven't taken care of taken care of it. But I really feel that this conversation it's a process, it's not an
yeah,
event. And sometimes if we're not capable at the high end, let's say we'll call that the G1ers, the ones who started the business or inherited the business, if they're not capable of having the conversation because maybe it's an emotional conversation, or there are different, it's one thing when you're two siblings and you own a business, but now when you have kids and they have kids and they have kids, you're further away from the source. So that's where it might be very advantageous to have an impartial professional, who's part of the process. They can meet with each of the individuals from the G1s, the G2s. G1 might have an objective that one of their G2 members is going to be taking over the business. But when that G2 person is interviewed by somebody impartial, and that G1 finds out that G2 has no desire to
yeah,
be owning the business. They want to be doing something that's involved with, the environment, or they feel the weight of it. And I mean, that would be a big mistake. Can you imagine you're passing along this very large enterprise to somebody who doesn't know their why or hasn't figured out their why to include that business? So I'd say you have to lean into this. This is about having, daring conversations,
yeah,
where you have to you need a certain maturity, and you need a certain wisdom to do it. And if you can't do it yourself, you really need to find somebody who can help you, because there's just far too much riding on the line here. It could be, you know, your legacy in terms of a business that's going to continue. It could be your financial legacy that you're supporting a lot of people, or it could be your charitable legacy, right? So it's really important to help that define. But make the effort. You'll see that once it does get done, and it might take a year, it could take 10 years,
Yeah.
right? It gives people the tremendous peace of mind knowing that everything is in its right place, as opposed to being on the front page of the business section where the lack of your estate plan ended up in a tax of $50 million to Ottawa.
Yeah. That would be that would be horrible. Um, and it happens, right?
Absolutely.
Um,
Absolutely. But this time of year, yeah, I know, Tyson, you were asking me specifically about sort of like why should people be thinking about at this time of year? And I wanted to just bring that up. This, I call this like very precious real estate, kind of like August to December 31st, because we know there's going to be a tax bill that's going to be due in April. And by the way, taxes are good. If you're paying taxes, it means you made money, right?
that's right.
But there's no law that says that you have to leave a tip. Okay, so what do the government have? They have RSPs, right? Right, you can do that, and there's structures you can put into place. But one of the things that most people don't realize is that charitable donations can be used to mitigate up to 75% of net taxable income that would be owed personally. So that means if somebody has, let's say, a $50,000 tax bill that will be due in April, if they donated $100,000 to charity, that would give them a receipt to save $50,000 of tax. But you can't use your receipt. You can only use your receipt to mitigate up to 75% of your tax. So whatever balance is left over, you can carry it forward for up to 5 years.
Okay.
Okay, so the point is now is a great time to say, hey, I have a choice. I can give money to Ottawa, or I can kind of double up and give money to charity. What people don't realize, though, and this is like the majority of Canadians, is that charitable donations as part of your estate plan can be used to mitigate up to 100% of your estate taxes. 100% of your estate taxes, including going back the year prior, which means that for every $2 that you put in your estate plan that goes to charity, you save $1 of tax. So now it comes down to, wow, that sounds fantastic. And the problem is that people don't actually do anything about it because they haven't done the planning to even know what's their tax bill today, or what would be the tax bill, let's say, at life expectancy based on a whole bunch of assumptions. So it's premature. That sounds very, very, aspirational, but practically it's premature. So that's why people really need to go through that process, that planning process. Get the big fat check mark. They're never going to run out of money. Here's the tax bill based on all your assumptions. Here's what you'll have. Here's what the tax bill will be at life expectancy. And here is all the never spend money that you're never going to spend that you're paying taxes on. Can we use some of that to sort of preserve what you've done, right? Or involve charity, or do both. And again, that comes back to the planning process.
Yeah, that's fantastic. So in the event that we have a senior in the family and they haven't done any planning and they've just named the kids as beneficiaries on everything, which is totally normal.
Yeah.
And the executor go in and make the decision that maybe we should allocate some of the estate towards charity in order to erase taxes within the estate.
So you're asking, can they?
Can they?
So,
Yeah, is that
so
possible?
well, so first of all, you need to make sure that you have a will. That would be
Yes,
great.
please.
Make sure that you have an executor who is geographically desirable and has some business acumen, right? That
Yeah.
you can help. And then you do have to give them permission inside of their will to be able to utilize tax advantages for whatever to do to minimize those taxes. Now the problem is this: that real planning for the charity should be done either within the will, right?
Yeah.
Or with some planning. Because imagine, let's say, just say it's a $10 million estate, and the executor says, wow, we have $1 million tax bill. Let's give $2 million to charity to mitigate that $1 million. Well, there might be some kids who are the haves, and there
Yes.
might be some kids who are the have nots,
Yes.
right? And they're going to say, hold on, how dare you give away my inheritance? Who gave you the right? That's why we have an entire department in law called estate litigation,
Yeah.
right?
That's
And
right.
nobody, no executive is going to want to do something for the estate where it's not, bought into by anybody, by everyone. So one of the things people have to realize is that, it's true that charity begins at home, right?
Yes.
But giving to charity is not about disinheriting your children. Giving to charity is about adopting charities that you're passionate about and disinheriting Ottawa. Do you
Yeah.
hear that? So you're not giving anything away. You're taking anything away from your kids. You're adopting charity and disinheriting the tax part of it. So that's why it's really important to look at all of this stuff while the sun is shining, because that's the only way to sort of make this all happen. But you mentioned about the grandparents. People always seem to be philanthropic. You have to be Bill Gates or Warren Buffett. But let's look at those people. They likely, let's say, will die, and they have a RIF,
Yep.
right? So when you die and you have a spouse, everything rolls over to your surviving spouse tax free. The tax bill is only due on the second to die of a husband and wife. But let's say that grandparents have a RIF, and let's just say it's worth, we'll say $1 million. It's easy to use it as that. So that tax on that $1 million when they leave it to their kids will be about 54%. That means your $1 million is only worth 470. So that's a very important piece of knowledge you should know about. Now you got 470 being divided up. Is that really going to move the needle for your kids when you have other assets that they're giving to them? If you're philanthropic and you left that RIF to a charity, you pay no taxes on it. And the
Yep.
entire $1 million we go to a charity. So you don't have to do the full amount, but why not do some of it, right?
Yeah.
And also, we talk always about most people are still giving cash, as far as cash checks or credit cards to charity. One of the areas that I'd like to get into a bit more with you is the donating of appreciated non-registered securities.
Yeah.
Like it's really sadly not done enough. And we're talking about major charities where they've got donors who are $10,000 a year donors, and 97% of the money is still coming from checks and credit cards. Something is wrong there.
Absolutely. Do you, and so that seems to be like a secret in within the industry, even to advisors. Um, so when do you stumble upon that and you make that recommendation to clients, say, hey, listen, you can actually donate the security and avoid
Yeah.
capital gains and get a receipt. What is the normal reaction that you get first before they accept it?
Well, I just got off a call just before you and I with a geriatric pediatrician, and his riff is gonna he's turning 71, and he's a very charitable person, and he says he gives checks and credit cards. I said, do you have any gains in your stock portfolio? It could be a mutual fund, an ETF, a segregated fund. So I said, wouldn't it make much more sense to take the most fat, pregnant capital gain stock that you have, which you should know that its own personally, if you sell it, whatever the gain is, you're going to have to give 26% of that gain or 27% of the gain as tax when you sell it. But if you donate it in kind to charity, you pay no capital gains tax and you get a charitable receipt for the full market value, which then you can use to mitigate taxes, which means that you're giving money away that doesn't even belong to you to charity. And again, if you love that stock so much, buy it again. But now the cost base is up. Or if you made such a large donation, why not use life insurance to replace the donation? Now your family gets fully whole. It's just a timing issue, and you can actually do that for pennies on the dollar or even on a cash flow neutral basis to make the family whole. So it's kind of like moving the shells around. But I know, Tyson, you deal with a lot of medical professionals,
Yes.
and I want to this you ask, what do people think when we tell them this? The corporate donations is where the real magic happens.
Okay.
So if you have any of your listeners, they have a holding company, an investment company, and they've got appreciated securities in it. As we said, stock, mutual funds, ETF, segregated funds. So when they donate in kind those securities to charity, first of all, it's a deduction for that company against active income. So now they've got a deduction, fully deductible, okay, 100%. But then they don't pay any capital gains taxes. And now with the inclusion rate going up, that means the 36% of the gain, which would go
Yep.
to tax, now there's no tax on that. Okay. Then what happens though, and this is where the cherry on the cake, the gain of that portfolio gets credited to the CDA, the capital dividend account,
Yes.
and that can now all flow out tax free to the shareholder. So let's just use an example. You bought a stock for 100,000, it's now worth 200,000. If you would have sold that, you would have paid $36,000 tax. But now you're donating the whole 200,000, so you're not paying the $36,000 tax. You're getting a deduction of 200,000 against active income, but the $100,000 gain now can come out of your company tax free, which means if you would have taken out $100,000 at any other time, half of it would go to tax. So now it's a beautiful thing. You can use that to be able to get money out of your company tax free. And again, if you so desire to replace that gift, then you can go ahead and buy some corporate owned life insurance
That's right.
in a cost efficient way to replace that gift. But anyone who's sitting with corporate shares, it's to me, this is where people go, I had no idea like that. And professional advisors have even said, I did not know that.
Right.
Tyson, I know you know that, but it's something that we really need to get out much louder and wider to the audience.
Yeah, absolutely. Absolutely. We're not taught this stuff. I mean, it's kind of unfortunate that for advisors, we don't have many places to go where we get good training for advisors from advisors. I've heard of this one place. It's called powerofplatinum.com.
Oh, I've heard
And
of that.
yeah, and it seems fantastic. I've talked to a few people that have come out of it. It's wonderful. And I think that's a gripe that I have with the industry is that a lot of our good training, it comes from product producers and manufacturers. So they're training us how to use their product, but they're not necessarily teaching us, like you said, how to move the shells around to give the most advantage to the client all of the time versus positioning a product. And sometimes if we, treat a client like a math problem, it's order of operations to get the best solution for the client. A lot of good comes out of that, especially if you do it over a career.
Absolutely. Look at I've attended a lot of conferences, a lot of top advisor events, and the sessions that are always the most popular are when advisors are sharing their process or their strategies. Now, sadly, a lot of these advisors, you're sitting there and you've got your notebook out and you're waiting to hear, and they don't tell you anything. You're like, what? Give me one piece of. So like I said, I've had some great mentors, people who were so generous with me, and I realize am very fortunate. I've been blessed to have, beautiful family and kids, grandkids, and this industry has been very, very good to me. And it's only because there were really good people who were generous and shared with me, what they were passionate about. So I feel an obligation to sort of pass this along to advisors, either through Power of Platinum or just through the work that we're doing just in the public.
Yeah, that's fantastic. I really appreciate you taking the time to, I know you're busy. I know Phil's got you stacked back to back to back to back, and you don't even have time to get water. Um, the one of the things that I like that you put out as a free resource from you and from your team is the tax letters. How long have you been doing those for?
So the Tax Letter Digest is a subscription publication that's been around for decades, but we've been writing for it since 2011.
Okay.
So it's a monthly publication. Unfortunately, they ceased publication recently. I don't know,
Oh,
there was
okay.
some, but we have over 160 publications of our own in this Tax Letter Digest. and we're happy to share it with your listeners. I can send it out to you, Tyson. You can make it available, or they can send me an email, mark@wealthinsurance.com. We'll be happy to send it to them. But each each article, which is probably about 1,500 words each, explains a situation that somebody had, and that explains what our strategies do as opposed to what they are. Like, to get into the weeds, they do explain how it gets into the weeds a bit more, but first we have to help them understand what something does.
Yeah,
And I think that that's really the key to our business, is how do we share these complex ideas in a very simple way. And that's all around the language. So I feel very blessed that we have that, but by all means we can make that available to your listening audience.
fantastic. I really appreciate that. And last thing, I usually like to leave off on a couple of questions. I'm really interested in the direction that you're going, the way that you, the way that you present your ideas and things. Is there a book or a series of books that you read that found really helped you in developing your communication or developing your messaging?
That's a great question, Tyson. Listen, I've really love asking successful people, what one book did you read that really made a big impact on you? And why should I go ahead and look for bestsellers when I can speak to people who are successful? And one of them that one of my mentors told me about is a book by a guy named Frank Bettger, Bettger. It's
Yeah,
called How I Raised Myself from Failure to Success in Selling. You don't have to be in selling. We all are in selling, right?
yeah,
But it was written by a guy who knew Dale Carnegie, and it's kind of short little chapters, story walking down Main Street in Philadelphia to meet Mr. Big, and then a nugget of a lesson from that story. So I find that good. I find also I like biographies. I like biographies a lot. Shoe Dog by
Phil Knight.
Phil Knight, great book on building Nike. I also like podcasts like How I Built This by Guy Raz on the NPR network, where he interviews the top. And you realize, you know what? Remember I talked to you about the masks before? All these people, Schultz of Starbucks, uh, anybody who's come up with, they're just regular people that worked very hard and had to be very, very courageous and persistent and deal with lots of struggles and lots of challenges. But we kind of need it because there's a lot of struggles in being in business, and I feel like you just sort of need to keep pumping yourself with inspiration to keep you through those difficult times.
Absolutely. Fantastic. Mark, thank you so much. I know we promised to get you out of here on time. Um, Thank you so much for coming on. I really appreciate this. I know I'm going to have some follow-up questions, but hopefully we could do this again in the early in next year and talk about another paradigm of the planning questions and opportunities that lay ahead for clients and for advisors.
That would be wonderful. Look at if, I look at you, Tyson, as not just a guy who has, a few hundred clients. I look at you as somebody who's connected to tens of thousands of people, because you're somebody who is a thought leader. You're somebody also who shares. And through your podcast, obviously, you're trying to get more of this sort of wisdom to people. So listen, if we could all work together, hopefully we can change things and do good and do well.
Yeah, fantastic. Again, thank you very much for coming on, Mark. I really appreciate it.
My pleasure. Thank you so much for having me.